$57.82. That's where IREN closed on Friday, January 16th, 2026, up 11.4% in a single session on volume that spiked to over 53 million shares. While the S&P 500 was grinding sideways, IREN Energy just delivered the kind of move that separates momentum from noise. But here's what matters more than one green candle. The stock is up 35% this week alone. It just broke out of a 2-month consolidation pattern, and Wall Street is officially in a bidding war.
H.C. Wainwright just upgraded their target to $80, and Bernstein is even more aggressive, naming this their top AI pick for 2026 with a bull case of $125. Is this a breakout that runs to 80 or a bull trap before a pullback to 50?
Let's look at the data. IREN Energy started as a Bitcoin miner. Standard play, clean energy facilities in Canada and Texas. But in late 2025, they pulled off the most successful pivot in the sector. They signed a $9.7 billion hyperscale AI cloud agreement with Microsoft. This isn't just a pilot program. It's a binding contract with revenue already scaling in this first quarter of 2026. The deal generates $1.94 billion in annual recurring revenue. But the whale stat is the margin. We are looking at 85% EBITDA margins. Compare that to traditional Bitcoin mining, which stays in the 30 to 50% range.
This is a structural transformation.
Microsoft is essentially paying IREN to convert its power footprint into an AI factory. The power contracts are locked in, the facilities are built. IREN just has to swap the rigs for GPUs and flip the switch. That's not a pivot, that's pure arbitrage. Now, let's talk scale. The Microsoft deal is just phase 1. IREN is scaling from 23,000 GPUs to 140,000 by the end of this year. And they aren't using old tech. They are deploying NVIDIA Blackwell GB300 liquid-cooled racks. This is critical. Blackwell GPUs deliver up to 30 times the inference performance of the previous generation. Because IREN owns its power and uses liquid cooling density, they can pack more compute into every square foot than almost anyone else in the market. In a world where AI demand is limited by power and heat, IREN owns the solution. They have a 2.9 gigawatt power portfolio. They don't lease from utilities at variable rates. They own the basis.
In Texas and Canada, their energy costs are 30 to 40% below the market average.
That is the Foundry advantage.
Let's run the math. At $57, IREN has a market cap of roughly $17 billion.
If the Microsoft contract alone delivers $1.65 billion in annual EBITDA, and you apply a conservative 15 times multiple, that contract is worth $24 billion by itself. The stock is trading at $17 billion. That implies the market is still discounting the Microsoft deal by 30% and giving zero value to their remaining power capacity. If they hit their target of 140,000 GPUs, we aren't looking at an $80 stock. The math points toward $95 to $100. But execution risk is real. Scaling 6 times in a year is a massive operational hurdle. If Blackwell chip deliveries get delayed, or if they run into power grid upgrades in Texas, the stock will pull back. The technical setup is clean. We broke resistance at $52 with massive volume confirmation. The next stop is the November high of $65. I'm holding for the $80 milestone, but I have a hard stop loss at $52. This is Foundry Pulse. We don't hype, we analyze. Subscribe to follow this trade. We're just getting started.